So Stefan's talked to you briefly through the benefits case that he's described in terms of the framework from C55. So what I've done, and I'm going to briefly talk through just in the next minute or so, is how I've mapped the benefits to that slide. So when we talk about efficiency through the plan development, efficiency in annual reporting, we spend a lot of time going through and checking data spreadsheets to satisfy an output of our regulator annually. And what we've been able to quantify as a result of working with the C55 is a 3% increase in efficiency across the teams required to report on the plan. And this is actually, in real terms, meant that we've been able to free up 2 technical resources to go and work in other areas of the businesses without the need to backfill. So we're not strictly a headcount reduction. We've avoided the need to recruit as well, which is a really positive aspect of this project. We also quantified a 15% increase in efficiency for the teams that are required to develop the plan for the next cycle. So in addition to the 2 FTEs that have moved into that role, we can get that efficiency in just running this process through a slick model rather than a number of spreadsheets that are being operated in isolation. We've also quantified the reduction in work from a fast-tracked business plan or a high-confidence business plan. This would avoid the need for the back-and-forth question and answer with the regulator on further information or justification required, which is quite a significant investment on our part in previous price controls. And the implementation of this system and the demonstration of confidence in robust asset management planning will enable us to avoid that rework. As I mentioned, we've got insurance premium cost saving, which is the 3% in insurance savings, which obviously significant costs to businesses such as ours, and that's the cost saving and avoidance that we've been able to quantify. In delivering the program, we can outperform at a high level benefit of about £10 million by implementing these processes. That's more of a future benefit that we're looking to realise, and that will be in addition to the streamlined efficiency, choosing the right investments and delivering bulk risk removal from the interventions that we choose through optimising rather than prioritising, which kind of adds weight to what Stefan had talked through previously around optimisation and prioritisation. And the fast-track regulatory submission, we're heading into a challenging price control where our regulator's looking to kind of tighten down on returns to shareholders and maximise improvements and benefits to customers. So using a tool such as C55, we're able to provide that confidence that we're delivering that and should be able to demonstrate efficiency through the delivery of interventions, optimization of robustly costed investments, and also a real justification of the need as to why we need to invest in the first place. As I mentioned before, the unvalued benefits sit broadly within this framework, and improved reputation and is held in very high regard by our shareholders and by the business. So we'll be looking to kind of build on that with Ofgem, build internal confidence and external confidence in our plan, and develop the next generation of asset managers that are really increasingly look to deliver value from an asset base, rather than just operating an asset to deliver a determined output. We're really focusing on delivering that value that we need to for our consumers.